Hi, this is Matthew Cratter from Trader University, and today I want to talk about the Bitcoin halving 2020, which is almost here. If you're interested in Bitcoin, crypto, or just want to see what I'm trading or investing in these days, be sure to hit that subscribe button. So we are almost at the halving, and I'm going to talk a lot about what that actually means in this video. The halving is projected to occur on May 11th, 2020. That's just approximately 12 days from now. But let me tell you why you should actually care about this. It sounds like something that might not be very interesting. The first reason you should care is because the S&P for 2020, the S&P 500, which is a very good benchmark for the stock market, is still down about 9%, even after the recent rally. Bitcoin, on the other hand, is up 16%. It's one of the few assets out there, besides the only other one I can really think of is gold. It's one of the few assets out there that is not just up in the year, and 2020 has been a very, very difficult year, but it's up double digits on the year. Bitcoin's currently trading at about 8,300 US dollars per Bitcoin. The good news about this is you can buy less than one Bitcoin. So it's a common fallacy that you need to have $8,000 to buy one of these. You can invest as much as just $1 or $2. Again, none of this is investment advice, just talking about what I'm doing. But the important thing to realize is that Bitcoin's currently at 8,300. These are the price targets that I have for Bitcoin. I know this sounds very crazy. These are crazy numbers. After watching this video, hopefully they'll make more sense. So 2021, by the end of 2021, I expect Bitcoin to be north of $100,000. This is a fairly conservative estimate. There are a couple new models out that suggest it could be as high as $200,000 or $300,000 per Bitcoin. By 2024, the price target on the model is $400,000 per Bitcoin. 2028, assuming the model holds up, is $3 million per Bitcoin. Unlike a stock, Bitcoin doesn't have a PE, it doesn't have revenues. There's a lot of potential for it to go even higher than this, $10, $20 million per Bitcoin. Bitcoin is like a big receptacle that you can fill up with all the world's wealth. And people are increasingly moving their wealth into Bitcoin. Now, the model I use to get these numbers is done by a quant on Twitter named Plan B. I'm going to link to his paper below, and I'm also going to link to some videos where I talk about the Plan B model. But that's where I'm getting these seemingly crazy numbers from. Now, what is the Bitcoin halving? The Bitcoin halving is a halving in the miner reward. It's when the miner's reward gets cut in half. Now, this takes place approximately every 4 years, every 210,000 blocks. Now, you've probably heard of the blockchain. Bitcoin has its own blockchain. It was the original blockchain. It's like a ledger or a series of blocks that are stuck together. Each block contains Bitcoin transactions. Now, how is a block made? A block is made by miners. And there's a race among Bitcoin miners to create a new block by solving a complex mathematical problem. And then when that new block is created, it gets added to the blockchain. There's a record. The blockchain is a record of all the transactions that have ever happened in Bitcoin. And the miner who first creates that block, who wins the race essentially, receives a reward called the miner's reward. Now, this is why you should be interested in the Bitcoin halving. We've only had two halvings before. The first one was in 2012. The second one was in 2016, and now obviously it's 2020. We're going to get the third one. You can see that the way Bitcoin works is you have these 4-year periods. And the first approximately third of each 4-year period is where Bitcoin really goes up a lot. So it did it in 2012 after the halving. It did it in 2016 after the halving. After that first third of 4 years, roughly, so call it 12 to 18 months, then Bitcoin often sells off or goes sideways. Now, after each halving, it always reaches a new higher equilibrium level, which we'll talk about because the supply is being cut. But this is a very propitious time to be invested in Bitcoin. The months, the 12 to 18 months following the halving, are when it usually has its highest price appreciation. Now, I'm holding. I'm not a trader of Bitcoin. I have traded in the past. I'm holding for these targets. So I will be holding through the halving. I'll be holding through many, many halvings. I will not sell any of my Bitcoin until it hits at least maybe $1 or $2 million per Bitcoin. But this is basically the pattern. Bitcoin rallies in the 12 to 18 months after the halving. Now, this is what a Bitcoin miner looks like. It's now no longer profitable to run the Bitcoin software, which is free open source software, on just a regular laptop or desktop. You need a specialized computer, a specialized type of hardware called an ASIC. This is what one looks like. These have become very expensive, and there's sort of an arms race here that goes hand in hand with Moore's law. As the chips become more powerful and more efficient, miners need to constantly upgrade their machines. So this is something that you or I can no longer do. Don't pay attention to people who are trying to sell you miners or get you to join miner cloud networks or any of these sort of scams. These miners are spread all over the world right now, and it's a very expensive business to be in. I don't think it's necessarily a very good business because it's very capital intensive. You need to constantly upgrade these machines in order to remain competitive. Now we're going to take a look at what a block looks like. This is called a block explorer. I'll link to this below. And you can see here that we have the block number, which is often called the height. So right now they are working on block 628,157. When we get to block 630,000, as I said, every 210,000 blocks. So the third halving will happen when we hit at 630,000 blocks. And you can see we have the name of the miner here if they know it, the size of the block. So you can click on any of these. We'll click on block 628,147, which was mined just 2 hours ago. These blocks are mined approximately every 10 minutes. So if we click on that block inside the block explorer, we can look a little deeper. It tells you the timestamp, what block number, who the miner was who received the award, in this case BTC.com. The number of transactions, 2,311 that were included in the block. These are Bitcoin transactions. There's some more technical stuff here, which we're not going to go into right now. But what I wanted to show you was the block reward. So there are two rewards that a miner will get. The fee reward, which is still very small, but then the block reward is a really a large amount. You can tell that it's approximately about 103,000 US dollars right now. So this miner, BTC.com, won this race to create this block, and that company, that miner, was rewarded with a block reward of 12.50 Bitcoin. Now, after the halving, this is going to drop. After May 11th, approximately, this is going to drop in half. This reward will drop down to 6.25 Bitcoin. Now, how do miners make profits? Well, when they win the race, they are rewarded with Bitcoin, which they can then sell on the open market. As I said, right now, 12.5 Bitcoin is the miner's reward. So at current Bitcoin prices, it's equal to about $104,000. So it's a good amount of money. But miners obviously have costs. They have the cost of the electricity. The energy input is the really big one. The cost of any labor, and then of course the long-term cost or depreciation of their mining hardware, their ASIC machine. Now, the good news about Bitcoin, it's becoming more and more green because you have a real advantage if you use low-cost energy. There are a lot of hydroelectric Bitcoin miners. They're using the electricity from hydroelectricity. There are also Bitcoin miners that are using flared oil and natural gas, etc., or solar power. One of the common critiques is that mining is very energy intensive and dirty. It's actually not. It's becoming much more profitable to use sort of stranded energy sources. But this is how miners profit. They receive the reward, and then their profits are just their revenues minus their expenses. Again, their expenses are mostly energy costs plus the cost of the equipment. Now, when Bitcoin started out, the miner reward was 50 Bitcoin. Obviously, Bitcoin was trading at a much lower price back then, just 10 cents or $1 or $2. The first halving happened in 2012. That miner's reward dropped down to 25 Bitcoin. 2016 dropped down to 12.5 Bitcoin, where we still are. And then approximately May 11th or May 12th, the reward will be halved again. This is why it's called the Bitcoin halving or halvening. It's referring to these miner rewards. Now, when the miner reward drops, what it means is that the supply of new Bitcoin drops as well. So right now there are approximately 1,800 new Bitcoin mined every day. Because of the halving, because that reward is being cut in half, this is going to drop to 900 new Bitcoin per day. So what this means is that supply, that constant selling pressure that you get from new Bitcoins is going to be cut in half. Anthony Pompliano has a good analogy for this. He says this is a little bit like closing half the gold mines in the world. What would you expect to happen to the price of gold if the demand for gold stayed constant or went up, and the supply of gold got cut in half because for some reason half the world's miners shut? Actually, a lot of the gold miners in the world, I believe, are still closed because of COVID. So this is not just a theoretical situation. But this is why the halving is so important. This block reward dropping means the new supply of Bitcoin that's being dumped on the market by miners in order to cover their costs and book their profits will be cut in half. So there's going to be a real let up in that selling pressure, that supply pressure. And Robert Rawlings, in a great tweet here, talks about how brutal the halving is. If you're not efficient as a miner, if you have old machines or your cost of electricity is too high, and then your revenue stream, your miner reward gets cut in half, you are done. You need to upgrade to a newer machine, new powerful machine, etc. So this is a brutal event for miners. Now we can see that Bitcoin is starting to price in this halving or halvening. It's up quite a bit today, up $600 today. And as we said, it's already up on the year. The chart looks a little bit like the S&P 500, but Bitcoin over long periods of time has no correlation with the S&P 500. I believe the correlation is about 0.15, which is essentially a zero correlation, very close to zero. And that's because Bitcoin trades on its own dynamics. It's really a function of energy costs, the miner's reward, etc. But why is this particular halving so exciting? Why do I keep making videos about it and talking about it? Well, the main reason is because the macro environment that we're in. So we're currently in an environment where all the world's central banks, especially the Fed, are having to print money to offset all the demand destruction that's happened during the COVID lockdowns, etc. And we're sort of still in the middle of that financial crisis. The Fed and the other world central banks, the Bank of Japan, the ECB, are basically having to create a lot of new money. And what do they do with that money? Well, they buy assets to prop up asset prices. This is a chart of the Federal Reserve's balance sheet. This is all the assets that they own. And you can see that they used to be below $1 trillion worth of assets until the great financial crisis of 2008, 2009. And then it's really been trending up since then. In the first quarter of this year, it's really gone vertical. We're now above 6.5 trillion. So this is how the Fed props up asset prices, which the whole U.S. economy, the global economy, is really dependent on these things. But a byproduct of this, a byproduct of printing all this new money, is that it devalues the U.S. dollar, and it makes things that have a fixed supply, like Bitcoin. Bitcoin only has 21 million coins. Things like gold, which are very difficult to mine, it drives up the value of these. And so we really have this perfect storm where Bitcoin is going through this halving at the same time we're having all this money printing. And that's one reason it's so exciting to see these two things coming together. And it looks like Bitcoin is finally beginning to price that in. During the liquidity crisis at the beginning of the year, people were dumping assets trying to raise US dollars, and Bitcoin got dragged down along with everything else. But it's since staged, it's sort of mean reverted towards its fair value, or its stock to flow value in the meantime. Now let's take a quick look at the 2016 halving. This happened on July 9th. I've marked it on the chart here. Now you can see that there's no guarantee that the Bitcoin prices go up immediately afterwards. In this case, it looks like we've had sort of a pump going into the Bitcoin halving, even though it was much less well known back then. The halving occurred, and then a lot of people got wiggled out by a drop. So this is not a short-term trade. This is something that I will be holding for many months, in fact, for many years as well. But if we scroll out here, we can see what happened. So the halving was right here. And you can see how we just got the incredible cycle. So at the halving, Bitcoin was approximately, call it $650 per Bitcoin. After that run up, it went all the way up to 20,000 in the following years. And this was before we had all this. There was still money printing going on by the central banks, but not nearly as much as we have now. Now I'm going to link to a couple tweets if you want to dig a little bit deeper into how mining works and how it affects the price. Preston Pish has a great graphic here, which I'm going to link to, as well as a couple tweets that talk about the energy efficiency of mining and how that affects Bitcoin prices and Bitcoin supply as well. Good article here too I'll link to that talks about the difficulty adjustments and the halvings and how they work together. I'm also going to link to my favorite Bitcoin dashboard. This is Clark Moody's. This is available for free. And it's got some interesting data on it. So it's one that I like to follow. You've got the price of Bitcoin here currently at 83.64. You've got the premium if you want to buy the ETF or the trust version of Bitcoin, which I don't like. I believe in real Bitcoin, but you can see that you have to overpay by about 4% to get that. Block height. This tells you how many blocks have been in the blockchain. We're currently on block 628,161. When this gets to 630,000, that will be when the halving occurs. We can see that right now they're about 18.3 or 18.4 million Bitcoin in existence, and there will only be 21 million Bitcoin ever made. If you think of how many millionaires there are in the world, how many people who want this is a very, very scarce asset. It currently has a market cap of just 153 billion. But as this market cap grows, this is just the price of Bitcoin times the number of Bitcoin in existence. As this market cap grows, it will allow more and more institutional investors as well to invest. And this is really what they're going to be looking at. They're not going to be looking at some of the other altcoins, which I don't like. So currently, 87% of all the Bitcoins have been issued. This is, as I said, a very, very scarce asset. And if you read Plan B's paper, you'll learn how stock to flow figures into this. Two more things I wanted to show you on this is the mining economics. So block subsidy, where'd it go? Block subsidy right here is, it looks like it's not going to let me draw on it at the same time. But the block subsidy is 12.5, as we said, right here. The block subsidy value 104,000 at current Bitcoin price values, and then the number of blocks to the halving 1,839, and as well as the halving estimate date. So I'm going to link to all this as well as this Bitcoin countdown clock, so you can follow along if you're interested. Now, when I talk about Bitcoin on YouTube, there are always a lot of objections that come up. And so I'm going to link to a couple videos that address some of the most common objections that I hear from people. So make sure you check these out. There's a good introductory video that I did just a couple weeks ago called Bitcoin for Beginners. It's about a 40-minute video, but I recommend watching this. I get a lot of people criticizing Bitcoin, saying it's a tulip bubble, all this sort of stuff. If you watch this video, you're still allowed to criticize Bitcoin in my view of it, obviously, but you'll be a more informed critic rather than just saying, ha, 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 it's a tulip bubble. Or rather than saying the government could shut down Bitcoin, this is a common fallacy. I'll link to this video as well. Is Bitcoin a pyramid or Ponzi scheme? It's obviously not, but it may not be immediately apparent, so I made a video on that. And then finally, I have a video on gold versus Bitcoin. I like physical gold a lot, but it can't hold a candle to Bitcoin. And as we're seeing, Bitcoin is going up much more than gold. And I'll also finally link to an interesting Bitcoin mining article that you can read if you want to dig in a little bit deeper to this. Hope you guys found this helpful. If you did, please hit that subscribe button and that like button. And let me know your questions or comments in the comment section below, especially if there's stuff you're also interested in learning about, you'd like me to make my next video about. You can drop it in the comment section below. Thanks a lot for watching. Hope you're all doing well, and I'll see you in the next video.